Crypto versus tradition, understanding the differences in just 6 minutes. Cryptocurrency has been a buzzword for a while now, and its popularity continues to grow. The world has seen a shift from traditional methods of payment and investment to a new era of digital currency. It's no surprise that with this shift comes a lot of confusion and misconceptions about what cryptocurrency is and how it differs from traditional methods. In this video, we'll be discussing the core differences between cryptocurrency and traditional fiat currency. We'll cover everything from the technology behind cryptocurrency and its decentralized nature to its security features and ease of use. By the end of this quick read, you'll have a solid understanding of cryptocurrency and how it compares to traditional payment methods. So, let's dive in and explore the world of cryptocurrency. 1. What is crypto? Crypto, short for cryptocurrency, is a digital or virtual currency that uses cryptography for security. It is decentralized, meaning that it is not controlled by any government or financial institution. Crypto operates on a blockchain, which is essentially a public ledger that records all transactions made with the currency. This ledger is maintained by a network of computers around the world, making it virtually impossible to hack or manipulate. One of the key features of crypto is that it allows for fast, low-cost transactions without the need for intermediaries such as banks or payment processors. This makes it especially popular among those who mistrust traditional financial institutions or for those who need to make international transactions. Many different types of cryptocurrencies exist, with Bitcoin being the most well-known and widely used. However, there are thousands of other cryptocurrencies available, each with its own unique features and uses. While crypto has many advantages over traditional currency and payment methods, it also comes with its own risks and challenges. It can be volatile and subject to extreme price fluctuations, making it a risky investment for some. Additionally, the lack of regulation and oversight can make it attractive to criminals for use in money laundering and other illegal activities. Overall, crypto is a complex and rapidly evolving field that requires careful consideration and understanding before getting involved. 2. How does crypto work? Cryptocurrency is a digital currency that uses encryption techniques to regulate the generation of units of currency and verify the transfer of funds. Unlike traditional currency, cryptocurrencies are decentralized, meaning they are not backed by any government or financial institution. Instead, they rely on blockchain technology, a distributed ledger system that records transactions across a network of computers. When a user initiates a transaction in cryptocurrency, it is broadcast to a network of computers, which then validates and confirms the transaction. Once the transaction is confirmed, it is added to the blockchain, which cannot be altered or tampered with. This process allows for secure and transparent transactions without the need for intermediaries such as banks or other financial institutions. Another key feature of cryptocurrency is that it is finite in supply. For example, there will only ever be 21 million bitcoins in existence. This scarcity creates a sense of value, similar to how gold is valued as a rare commodity. Overall, cryptocurrency offers a new way to store and transfer value, outside of traditional banking systems. It's important to understand how it works in order to make informed decisions about whether or not to invest in it. 3. What are the benefits of using crypto? One of the biggest benefits of using crypto is the level of security it offers. Traditional banking methods involve a third-party intermediary, which means that you have to trust that third party to keep your money safe. With crypto, however, all transactions are recorded on a decentralized ledger called the blockchain. This means that there is no central point of control or authority, and all users have equal access to the database. As a result, it is virtually impossible to hack or manipulate the system. Another benefit of using crypto is the speed and convenience of transactions. Traditional banking methods often involve long waiting periods and high fees, particularly for international transfers. With crypto, transactions can be completed in a matter of seconds or minutes, and at a fraction of the cost. Finally, crypto offers a level of privacy and anonymity that is not possible with traditional banking methods. While all transactions on the blockchain are public, users can remain anonymous by using pseudonyms or anonymous wallet addresses. This is particularly important for people who live in countries with strict financial regulations or who are concerned about government surveillance. 4. What are the downsides of using crypto? As with any financial instrument, there are downsides to using cryptocurrency. One of the biggest downsides is the volatility of the crypto market. Prices of cryptocurrencies can fluctuate wildly within minutes or even seconds. This is due to a lack of regulation in the market and the fact that the value of cryptocurrencies is based purely on supply and demand. Another downside of using crypto is the fact that it is not widely accepted as a form of payment. While more and more companies are starting to accept cryptocurrencies as payment, many businesses still do not. This means that using crypto can limit your options when it comes to making purchases. In addition, there is a risk of losing your cryptocurrency due to hacking or other security breaches. While crypto transactions are generally secure, there have been instances where exchanges have been hacked and users have lost their investments. Finally, because cryptocurrencies operate outside of traditional financial systems, they are not protected by government-backed insurance schemes. This means that if something goes wrong, there is no safety net to protect your investment. It is important to do your research and understand the risks before investing in cryptocurrency. 4. What is traditional currency? Traditional currency, also known as fiat currency, is the type of currency that we are all familiar with. It is the currency that is issued by governments and regulated by central banks. In most cases, traditional currency is in the form of banknotes and coins, which are used to make purchases and transactions. The value of traditional currency is determined by a number of factors, including the supply of money in circulation, the strength of the economy, and the decisions made by central banks. The government has a monopoly over the issuance of traditional currency, which means that they control the supply of money in the economy. One of the key features of traditional currency is that it is physical in nature. You can hold it in your hands, store it in a bank account or wallet, and use it to make transactions. However, the rise of digital payments has made it easier to use traditional currency without the need for physical currency. With the advent of credit cards, online payments, and mobile wallets, traditional currencies have become even more accessible and convenient to use. In contrast to cryptocurrencies, traditional currency is not decentralized, meaning that there is no distributed ledger or blockchain to record transactions. Instead, traditional currency relies on a centralized system, which can be vulnerable to fraud, corruption, and hacking. Despite these drawbacks, traditional currency remains the dominant form of currency in the world today. 5. Which is better, crypto or traditional currency? The answer to this question depends largely on personal preferences and individual needs. Both crypto and traditional currency have their own advantages and disadvantages, and it ultimately comes down to what you prioritize in terms of security, speed, and convenience. Traditional currency is backed by governments, which means that it is generally more stable and less volatile than cryptocurrency. In addition, traditional currency is widely accepted and can be easily converted into other currencies when traveling abroad. However, traditional currency is also subject to inflation and is vulnerable to fraud and theft. On the other hand, cryptocurrency is decentralized and operates independently of governments and financial institutions. This means that it is generally more secure and less vulnerable to fraud and theft. Cryptocurrency transactions are also faster and cheaper than traditional currency transactions. However, cryptocurrency is still a relatively new technology and is subject to more volatility and uncertainty. In the end, the choice between crypto and traditional currency ultimately comes down to personal preference and individual needs. If you prioritize stability and widespread acceptance, traditional currency may be the better choice for you. If you prioritize security and speed, cryptocurrency may be the way to go. We hope you enjoyed our quick guide on the differences between crypto and traditional currency. The world of finance is changing rapidly, and it's important to stay informed about the differences between these two types of currency. As you can see, there are some clear differences between the two, but both have their strengths and weaknesses. Whether you're looking to invest in crypto or stick with traditional currency, we hope that this guide has helped you make a more informed decision. Stay tuned for more insights in the finance world.